You ever go to buy something you've had your eye on and it's just gone? Not just back ordered, but completely unavailable? Well, according to one analysis we're diving into, that exact scenario might be playing out right now in the physical silver market. And we're not talking about a simple inventory hiccup. We're talking about the early creaking sounds of a potential structural breakdown, one that could have massive implications for dealers and anyone trying to get their hands on real physical silver. Okay, let's just let that sink in for a second. This is a pretty powerful statement, and it really sets the stage for everything we're about to cover. The source here isn't talking about a short-term market fluctuation. No, it's suggesting something is fundamentally broken in the physical supply chain. That's a huge claim, right? So what's backing it up? Let's dig in. So if something is breaking down, there have to be warning signs. What are they? Well, the source lays out a few really interesting signals that, when you connect them, start to paint a picture of a market under some serious stress. So let's break them down one by one, starting with the one that's hardest to ignore. Now, this first piece of the puzzle isn't something you'll find on a complicated Wall Street chart. Nope, it's happening in plain sight. According to our source, silver dealers, the very places you'd go to buy, are quietly starting to close up shop, or at the very least, they're hitting the brakes on sales. This has become a really common sight for a lot of retail buyers. You go to a website you've trusted for years, you're ready to buy, and bam, you're staring at empty digital shelves. Products that you could always count on being there have just, poof, vanished. And then you have some dealers who are taking it a giant step further. They've just stopped taking new orders altogether. Think about that for a second. This isn't just one coin being out of stock. This is the entire buy button being switched off. For an industry that literally exists to sell, that is a massive red flag. And then, in the most extreme cases, some are just closing their doors completely. The source is really clear on this point. They're not doing this to be cautious or to wait for a better price. They're doing it because they have to. The physical metal just isn't there for them to sell. So here's the bottom line on why this matters so much. These aren't just a few random dealers having a bad week. The argument is that these are symptoms of a much bigger issue. You've got this insane demand crashing headfirst into a very, very thin supply. And what's really fascinating is how quiet it's all been. Dealers, they don't want to cause a panic, but that silence itself is a pretty loud signal that the physical market is under some serious strain. Okay, so why now? What's causing this? Well, the argument is that these dealer shutdowns aren't happening in a vacuum. They're a symptom of the jitters and the stress that we're seeing all across the global financial system. When the ground underneath the whole system starts to feel shaky, people naturally start looking for something solid to grab onto. Just look around. You've got the bond market sending out all these crazy, conflicting signals. Are we heading for a recession, or is it runaway inflation? At the same time, banks are quietly tightening up on lending, trying to lower their own risk. Throw in the historic, eye-watering levels of government debt, and you can see why trust in paper assets might be wearing thin. All of this creates what they call a flight to safety, where money just pours out of paper and into tangible things you can actually hold, like silver, and that just adds more and more pressure. This next part, for me, really gets to the core of the whole issue. It's all about this huge, critical difference between the idea of silver that's traded on financial markets and the actual real physical metal itself. They are not the same thing. And this just lays it out perfectly, doesn't it? On one hand, you have paper silver, ETFs, futures contracts. You can create a nearly infinite number of those claims on a computer screen. It gives this illusion that there's tons of silver everywhere. But then, there's the physical reality. There's only so much you can actually dig out of the ground. As more and more people say, hey, I don't want the paper, I want the real thing, that illusion of abundance just shatters. And on top of all the investment demand, you have this other monster force constantly eating away at the supply: industry. We're talking solar panels, EVs, all our electronics. These industries need silver, and they can't just stop buying it. It's not optional for them. So that creates this constant, relentless drain on global stockpiles that doesn't care about price or what the market's doing. It just consumes. By the way, if you're finding this useful, please like, share, and subscribe to follow us so you won't miss any of our updates. All right, but there's another huge piece to this puzzle, and it's one that's mostly happening behind the curtain. We're talking about the large-scale buying by what this analysis calls the quiet accumulators. These are the big institutional players. So while you or I might be buying, maybe 100 ounces here and there, One of these institutions can come in and place an order for 100,000 ounces, or even more, all at once. An order like that can instantly wipe out the inventory that was meant for thousands of smaller buyers, and it often happens before that metal even hits the public market. And these guys, they play a completely different game. They move in silence, using private dealers so they don't tip off the market and cause a price spike. Their moves are described as strategic. They're not just gambling on the price, they're preparing for major disruptions down the road. And the takeaway here is pretty stark. When the so-called smart money starts moving this quietly and at this kind of scale into a physical asset, it's a massive signal that they see trouble on the horizon. So where is all this heading? What's the end game? Well, the argument is that all these things, the dealer shutdowns, the shaky financial system, the unstoppable industrial demand, and this massive institutional buying, they're all converging. It's like a perfect storm, pushing the market closer and closer to a tipping point, where a very real, very visible global shortage could appear, and fast. According to this analysis, a full-blown shortage doesn't just happen overnight. It happens in stages. First, you see premiums go up and those out-of-stock signs appear. Then, you get widespread dealer shutdowns. After that, you could see delivery delays stretching for months, then a huge split between the paper price and the real physical price, and finally, all-out panic. The source suggests we are already, clearly, in stages 1 and 2, and things could escalate from here very, very quickly. And this is the final thought we're left with, and it's a powerful one. All these warnings are blinking red. But the real question isn't if the market could reach a breaking point, but how fast it could happen. Markets can feel stable for a very long time, while pressure builds and builds right under the surface. Then, suddenly, everything can change. The key takeaways are clear. Dealers closing is a real-world signal, the global financial system is pushing people to safety, and massive silent buyers are hoovering up supply. By the time a shortage like this becomes front-page news, the chance to do anything about it might already be long gone.